Good evening, everyone. This is Srikanth Rajan, and welcome back to Market Pulse video, where we discuss about what happened last week in the market and what could be expected next week. Well, of course, I am sure all those members who are actually invested for long term are definitely really happy about it because the markets have actually rallied up. Not only just rallied up, but in fact, they are at a historic high. The Indian stock market has crossed that important historic high, and now it has set a new record. And right now, Nifty is at 19,189, which is almost 300 points up from the last high. So, at this point of time, of course, a lot of thoughts come into our mind whether this is it's rising up so much. Is it time to book some profit, or do we add some more? So of course, I don't advise people who have not added recently to add more. But of course, if you're a SIP mode of investor, that is on a monthly basis, on a regular basis, if you're investing, just keep continuing that, no stoppage on that. But then, if you are a person who is investing in intervals, longer periods, then I would say this is not the time to invest. But not that market will not rally further. There are chances it can rally further also, but the risk to reward ratio at this point of time doesn't look great. So with that, kind of situation right now, it's not time for you to invest. But if you, if there is a big rally, of course, you would be missing out on that. But there is no option. That's exactly why I say it's only those members who are continuing to stay invested in the markets who make money, and not those who kind of try to time the market. So of course, we can never time the market. Whoever thought that the markets at this point of time last week when there was a holiday, the market hitting an all-time high, that too on an expiry day, breaking all records, and then Friday again a big rally. And in spite of that, if you look at the US markets have also been doing really well in the last 2 days. European markets have closed in the green. So with all that, there's a general positivity across the globe right now. But the interesting part is, yes, the only few markets which I know which is at all-time high is one is Japan and second is India. So that is something really amazing. So at this point of time, of course, again, I can tell you who should book profit. So if you are a person who has actually got a lot of exposure to margins, then it is time you reduce your margins, because definitely not a good time to carry forward margins at this point of time. So I think you should reduce your margins. So you probably can book some partial profits and reduce your margins. Not reduce, I would say go completely out of margins. This is not a time to carry margins henceforth. Because one thing about markets is that once it starts rallying, and if there is no pullback, then that fall that comes after this can be really big. So when that is going to happen, nobody knows. But then, of course, that could happen one of these days. Maybe in the next few weeks, nobody knows. But of course, there is a pullback coming. There's a small correction coming. But that does not mean that the rally is over. It could be a pullback for a short term, and then markets can continue to rally. But then, if you remember, we have spoken this multiple times here itself, that the stock markets have been expected to do well. In fact, in last few weeks, I have been telling this continuously in the most of our market pulse videos as well, that the markets are going to see good highs soon. But of course, even I did not expect it to have happened last week, but that was really quick, I would say. But at this point of time, things are looking really fantastic, isn't it? If you look at the few instances that happened last week also, now there's a definitive time that HDFC merger is kind of finalized. So I think from July 1st, it's already done, the finalization of merger and getting together as a single company. But then on the market, if you see, the trading is going to happen as a single share on 13th of July. So do remember, I think, for every 25 shares of HDFC is what they're giving, about 42 shares of HDFC Bank. So if you have HDFC in your portfolio, ensure that it is in multiples of 25. That means if you have 102, make it either 100 or 125 so that you get the benefit. Otherwise, what will happen is probably the brokers would just square off your extra number. So if you have 102, probably they may score off 2 to make sure that you are in the band to get the eligibility for HDFC Bank shares. But again, there might be some sell-off because of the same discussion we had discussed earlier, that mutual funds, which has more exposure to HDFC and HDFC Bank, because of the SEBI limitation of not having more than 10% exposure to a single share. Now that HDFC and HDFC Bank have actually merged, many mutual funds which have more than 10% probably 10% in each of them will try to reduce their holding. But if that is actually bringing some sell off in the market, I would suggest that, again, sorry, no suggestions, but of course I would be looking at adding maybe a few of the stocks, because that could be a good one for a long term investment. So this is what we can expect of HDFC Twins. Apart from that, interestingly, on Friday, not Friday, Thursday, what happened was something really interesting. If you remember, the FII buying on the day was almost 12,000 crores. 12,000 crores. Now, something really interesting is, out of the 12,000 crores, 8,000 crores was a block deal in Nadani Group. So what is cooking there is something that nobody knows. But then, of course, all that power put together was actually what took the market up, along with the HDFC Twins. So these are things which has actually driven the market up really well. But then the way the markets have actually broken out, it's a clear breakout, I would say. So at this point of time, the markets are looking really bullish. There might be some small corrections, but then after that, again, a longer term, definitely Indian markets are going to be looking really bullish. And if you want to make really good money, you should be a part of this journey. That's something very important. Apart from that, one very important news that came over the weekend was the GST collection. So GST collection has hit yet another record of more than 1.6 lakh crores of GST collections, which is a record set for India as well, because it has never happened in the history of India where the GST collection in a month has gone such big. So all these are only bringing more, positivity to our thoughts, wherein we have been discussing about how the Indian economy could turn around, and probably the $5 trillion, which was expected to be, $5 trillion GDP, which was expected to be happening by 2030, could probably now happen earlier as well. So these are few things that's actually adding a lot of positivity to the market. And the interesting thing is, at this point of time, when the markets are at the all-time high, the institutions are still buying, net buyers to the core. So that's something which is adding more confidence. But then, like I've told you earlier, FIIs are the people who are buying now. DIAs are slowly booking partial profits. So FIs are people who generally come in for a short term. So at any point of time they can start booking profit as well. But then that cannot be commented on. But as a long term investor, you don't have to worry about all these small things, because your investment is of course safe in the Indian market at this point of time. And a consistent investment would of course bring amazing returns on your investment as we go further. So that's the confidence that we can have on the markets at this point of time. Apart from that, if you look at US, US markets have kind of forgotten the rate hike fear and all that, because now they're kind of sure that with all the economic data that's coming in, probably there might be two rate hikes in the US, but then after that they will definitely stop. With the Federal Reserve will definitely stop rising the rates, and that is of course a positive. So a lot of people are expecting that, and that's probably driving the positivity in the US market. And interestingly, I had some investment in the US banks when the US banks fell really bad, and that has kind of started picking up well. So I think over last 1 week, I think the banks have started recovering. I think almost my bank holdings in the US have actually gone up by almost 10%. So that's really good. At this point of time, I would say the markets are looking really bullish for this week. For the levels, if you say the important levels, on the downside, of course, 18,800 would be a very important level, but on the higher side, no levels at all, because the way the markets are bullish, we really don't have any reference on the higher side. So that's exactly why we at Gold Club have actually started taking very long-term trades in the options selling, and that helps us make some adjustments if required based on the market movements. So that would be what I would something that I would be advising at this point of time, because nobody has a reference for the higher level. So it is time we actually wait for a fall. But then many times it happens that, since markets have actually rallied up, people start thinking that we will see a fall soon. But there has been times when the market has not seen a fall in spite of such rally. So that can also be happen. So be prepared for that. So be cautious when you trade at this point of time. So it's kind of okay to be away from market in trading, especially shorting the market at this point of time when the markets are so bullish. So that is kind of, unless you have the experience, there's no point in doing that. But again, as a long-term investor, I would say the best way to always stay invested in market is, of course, by being a consistent investor on a SIP basis, on a monthly basis, because that actually gives amazing returns over a period of time. In fact, if you look at one of my mutual fund which I had invested in the last year, so at this point of time, it's sitting with almost 28% return. So that's the key. So, staying invested and being disciplined on the investment is something very important to make a lot of money in the equity market. So that's exactly what we followed MPA family, and I'm sure it is going to benefit all of us. So these are few things that we had to discuss. Apart from that, there is no major things because, of course, it's a new month start. The July month is starting, so we will have the new sales data and automobile sales data and other data coming up this week. So that is going to impact the market. But it was really interesting to see even how auto sector has been kind of shining at the last week. Tata Motors, Ashok Leyland, Mahindra, all of them have hit brand new all-time highs. So all these things are kind of fueling up the market really big. But of course, a close watch would be on SDFC Twins on what would be happening on that counter, basically because of the merger activity. So from I think 14th, I think there should be only HDFC Bank, the one stock in the market. There will not be HDFC Limited. So let us see how that is going to happen in the market. Meanwhile, one very important news to all of you. We were discussing about the NSE rules of changing Bank Nifty expiry to Friday, but then they have now recalled that. So Bank Nifty will continue to trade on Thursday. So that means volatility is going to continue on the market. So that is something which we can't do anything with. But then, of course, let's trade safely and can make consistent money. That's exactly what we want to do. So that's it for now. Of course, you must have seen the background. Of course, I'm not at office. I'm right now at Dubai. So I'll be here for a month, which I've informed you earlier. So this is going to be a new background from today onwards for further videos. And of course, I'm traveling multiple places. So of course, this will keep changing as well. So that's it for now. This is Srikanth signing off. Until we catch up on the market update tomorrow morning. And apart from that, we will also be, meeting up at 7:30 for MPA family members. So if you're not a part of MPA family, it's time you do join. It's completely free. All you need to do is connect with us on the WhatsApp number mentioned on the scroll here, or even you could just go to our website mpainvest.com and schedule your appointment with us, and our team will help you join the community and also learn how to invest and grow your money better. So that's it for now. This is Srikanth Rajan signing off. Until we catch up tomorrow. Goodbye.